3-box breakout is a strategy based on the box that is formed from the 3 o'clock at the 9 o'clock GMT Berlin. Time frame 30 minutes or 60 minutes. Currency pairs: Euro to US dollar, Pound sterling to US dollar, Australian dollar to US dollar to Swiss franc. Session: London. MetaTrader indicator: 3 breakout box. Insert pending order how indicate on the screen. Target price 130 pips. Target price 260 pips. Target price 390 pips. Initial stop loss 30 pips after 22 pips in gain move stop loss at the entry price. This trading system is perfect for to use an EA for managed position. The 3-box forex breakout strategy for MT4 is based on an indicator that draws boxes on the chart. The boxes highlight the price range of the price action which formed between 3 GMT and 9 GMT. These boxes are used as breakout zones during the European session, so we should be expecting to take trades during the London trading sessions while using this strategy. While using the 3-box forex breakout strategy for MT4, you might get confused by seeing the complex chart setup process. But if you divide the steps and sequentially analyze the market data, you should be able to find the breakout entry points without much hassle. Now, let's check the essential elements which we will be using in the 3-box forex breakout strategy for MT4. A breakout trading is one of the most traded techniques in the forex industry because of its potential to deliver massive pips. The breakout box indicator for MetaTrader is the best forex indicator for trading breakouts. The indicator identifies and automatically draws a rectangle box around a significant support or resistance zone. This MT4 indicator does the technical analysis on timeframes that are less than 4 hours. It doesn't draw the rectangle boxes on timeframes that are higher than H1. It is also worthy to state that the breakout box indicator works best on the H1 timeframe. Additionally, the indicator can also be incorporated into different trading styles such as scalping, day, and intraday trading. The indicator can potentially add more value to your trading because it helps you to easily identify a valid support or resistance level. With such information, you can make trading projections and be prepared for further price movement. The breakout box indicator would be of immense benefit to novice traders that may not know how to spot significant support or resistance levels. Of course, expert traders are not left out as the indicator also makes technical analysis easy for them. You only need a glance at your chart to know what the market is trying to do. The breakout box indicator for MT4 is a popular forex indicator that identifies and draws a rectangular box around significant support and resistance levels on a chart. The breakout box indicator works by analyzing timeframes less than 4 hours and drawing a box around important support and resistance levels. The indicator works best on the H1 timeframe and can be used for a variety of trading styles including scalping, day trading and intraday trading. This indicator is ideal for new and experienced forex traders who want to trade breakouts and take advantage of potential market movements. The easy-to-use breakout box indicator will help you trade successfully in the forex market. Functions of the essential factors by seeing the above chart. It's very normal to get confused during the data analysis process. But if you learn about the functions of the essential elements used in the 3-box forex breakout strategy for MT4, you should be able to find reliable breakout patterns. 3 breakout boxes indicator. After installing the 3 breakout boxes indicator, you should be able to spot some highlighted boxes in the main chart. Each box is formed adjacent to horizontal colored bars. The upper portion of the bar has a blue color and the lower portion of the bar has a red color. Identifying the potential trading box at the bottom of the main chart, you should see a selling and buying zone. Though the 3 breakout boxes indicator will give you an exact entry and exit point, still you should not rely on that levels. Instead, consider those numbers as a reference point so that you can become more concerned when the price reaches a certain price level. The bullish and bearish breakout. The breakout of the boxes is identified with the help of the bullish and bearish candle. Without having a clear concept regarding the candlestick pattern formation, you might end up taking the trades during the false breakout. However,